Hey guys, it's Will here. I just thought I'd do a market update. Just before I do that, I wanted to show you that you might see videos. There's a lot of negative videos about the markets and the economy and stuff. You know, there's a lot of bad news out there uh, based on the pandemic and what's going on, and worries about earnings and the Fed printing money and governments borrowing money and unemployment and stuff like that. So there's issues to be worried about, but there's also a lot of improvements in things. So it's depending on how you're looking at it. And I just wanted to give you an example. There's this channel, and you can see that the titles: economic chaos, turbulence, more bankruptcies, lockdown, economy, bubble economy goes pop, evicted, people getting evicted, banks preparing for crash, savings accounts destroyed, Airbnb panic, stock market sell off. So it's just one example. I enjoy, it's entertaining to watch some of these videos, and there's other channels that are pretty negative as well. And so the idea is not to really anticipate or predict the future, but just look at the charts and trade based on what's happening at the current time. And you're using kind of probabilities based on technical analysis of what's happening in the charts. So anyways, but the reason that these videos are done, in my opinion, is because they get a lot of attention. So we tend to look at negative news, like most of the time. We all want to see what's happening and threats out there. We don't really look at a lot of positive news. That's why newspapers, focus on the negativity. And I noticed that it's all risk, warning, panic, sell-off, etc., and nosedive. And when you scroll down far enough in this particular channel, you get to the point where there's not the negativity, and the views aren't that great. So if you go way down here, like starting a business and saving money gets a couple thousand views, stuff like that. How to make up $150 a day gets 1,700 views. And now once he started doing negative, you can see 25K, 37K, 47K. So it's working. You generate clicks, you generate ad revenue. And like I said, there's legitimate issues to be worried about, but it works, and that's why we do what works when you find out something like that. So I'm going to open up TC2000, and this is what I use to analyze, look at stock charts and stuff like that. And if you want to get a free trial or a $25 discount, you can check it out in the description below. There's also a couple of courses in a chat room for trading stocks on candlesticks and using moving averages and stuff like that. So just an in-depth course on how to trade, because there's quite a bit of detail on managing a trade when you get into it. So I'm going to focus mostly on the markets today, on the charts. And so we've got a few, typically the NASDAQ, Dow, S&P 500, and the Russell 2000. So we had a peak here, and it came down, and it was kind of flat underneath the 200. You see how it hits the 200 moving day average. So this is an average of the last 200 days. And you can see we hit it here and here. So it's kind of a resistance. And so during this phase, you generally, it's okay to trade individual stocks in that market if they look good on the chart. But when the market's going horizontal like this, just from the market perspective, it's pretty flat. So now we've had this rise recently, and we've broken up above the 200. So that looks pretty good. If you're looking at other indicators, you have the stochastic rising, you have the MACD kind of crossing. And so that's a pretty good sign there. There's a possibility that we're in this sector rotation now where things are moving into the stocks that got kind of beat up, the small caps, the banks, hotels, cruise ships, stuff like that. It's not really, it's kind of uncertain because, there's more waves of the pandemic, of the virus. So tech is still doing well. So I think, if there's another wave, another more serious wave, things could go, move back into tech, or sort of focus on tech, because people are they keep hoping that the beat up stocks are going to come back, and it's not 100% sure if it's going to do it in a sustainable fashion each time that it starts to surge. If we look at the Dow, a similar situation where we were kind of bounced off the 50 and stuck at the 200. So you kind of get squeezed here as the averages get close together, and then it pops up above. So now we're in this, and you've seen we've come back a bit and tested the 8 moving average, 8 EMA. So that's looking pretty good as well. And this morning, it's up again. So S&P 500, it was up above the 200 the whole time because it's got a combination. It's got some tech in it. It bounced off the 200 a couple of times, or the 50. And now we're in this really nice uptrend. So that one looks really good. And then finally, the NASDAQ has been obviously on a tear, and it's looking like it's going to be up again today. So all the markets look really good. There were periods where, in particular for the Dow, that we had some issues. Keep in mind that we had this island reversal, so there's a few candles up here where it gapped up and then gapped back down, so there's like a space here. And that is right around where it peaked. So if I draw a line at the top of this gap, it did hit off there and come down. So you kind of want to see that it's going to break through there. But like I said, everything's looking really good. Since I mentioned NAT quite a few times, we'll take a look at that. So it's not looking great. I talked about this many times, but this was a period where it could have broken through and come back. But oil is not, didn't really do what people, it hasn't done much for a while. It's been pretty flat. But you'll see that happen a lot where it spikes and then people have this hope that it's going to spike again, and it doesn't. And so when you have these candles down below, that are really small candles down below the 8 EMA, and then they sort of lie flat on this 200 moving day average, see, as support. So the good news from that perspective is it's got support at the 200. Then it came up to the 50 moving average. So you can see, if you're not, if you don't really believe in technical analysis, you can see a lot of times everyone's looking at these things. So it gets support at the 200. It kind of bounced off the 50. So, if you're buying really close, if you think it's going to come up and it's really close to the 50, you might want to wait and see if it gets through the 50 rather than buy it like right up here and then have it bounce off. So right now, it's kind of in a flat period between the 50 and the 200. So, you'd probably want to wait on this one. All right, so that's pretty much what I wanted to mention. So once you see that the markets are in good shape, a cool feature of, let's say if I'm on the Dow and I think, yeah, it's pretty good shape, I can click on this icon here which says open the component watch list, and I can see all the stocks inside the Dow, which is awesome. And there's different ways to sort, and you can also scan for whatever criteria you have. But if you want to just look quickly at percent change, this is this morning usually. IBM is up 5%. And so you can look at the charts and hit the space bar, and ExxonMobil. So just because they're up doesn't mean the chart is going to look very good. So there's another couple of columns I put on here, which is the slope of the 8 EMA. And so that kind of shows you stocks that are that have a good upslope. And that's a better indication rather than just a percentage gain. And this is Pfizer, Intel. So you can go through Microsoft and look at the stocks inside the market for whatever criteria. Like I said, you can also scan these you can scan these stocks and filter them out for price or volume or whatever other criteria you have. All right, guys, hope you like that. We'll talk to you later.